A few months ago, I made a video about GameStop telling you about my exit strategy on this stock. I talk about 6 possible scenarios of what may happen and how I would react to them. I also made an analysis about this. We have reached scenario 4, that is a reboot. What do I mean by a reboot? It means that some activist investors or even the board by itself, they decide to bring some changes to the operations of the company to move the business more online and also to make it more competitive, more efficient. This is exactly what we are seeing with Ryan Cohen along with 2 former executives of Chewy joining the board of GameStop. We have already seen some changes. In the past, GameStop used to define themselves only as a company selling video games in 5,000 stores in 10 different countries. Now they define themselves as a digital-first, omni-channel retailer offering games and entertainment products in over 5,000 stores and comprehensive e-commerce properties across 10 different countries. So you see the whole definition of the company have changed. They are calling themselves now a sort of a tech company. It's not true. They are still a physical retailer. We are going to talk about that in this video, how the changes are happening, because we have new sale numbers which we are going to talk about. But first, please make sure to smash the like button for the YouTube algorithm. If you are new to the channel, my name is Ishfaaq. I am a popular investor on eToro, where I manage assets for 400 people. So please subscribe and hit the notification bell so that you don't miss the coming videos. Like I mentioned, it is important to talk about the holiday sales numbers first, because GameStop, on the same day that they announced that Ryan Cohen and 2 of his former colleagues joined the board, they also announced about the holiday sales. And it was not that great. The sales compared to the same period last year was down about 3.1%, but the comparable same-store sale was up 4.3%. So in my opinion, it's okay. I saw some predictions made by bullish analysts on GameStop on Twitter, people who look at these numbers very carefully. I don't really look at these numbers very carefully. I will look when the quarterly earnings come, then I will look about other real numbers, the real sale data. But there are people who follow this very closely. They are expert on GameStop. So on Twitter, they posted their predictions and GameStop actually beat the prediction. So in some way, it is good. But what's really interesting here is that the online sales increased by 300%. And online sales accounted for 34% of the total sales. When I first started looking at GameStop, at the time they had 7 different revenue segments, and one of those segments were e-commerce, online sales. I think they call it digital something. I didn't really care about that because at the time it did not contribute that much to the total revenues of the company. So I didn't really care about that. I cared about hardware, software, and the other revenue segments they have. When we're talking about online, this counts hardware, software too if people buy it online on GameStop. But still you can see that they are shifting more online. 34%, that's not a lot. There's still much work to do, and this is why Ryan Cohen has joined the board of GameStop. We need to bring it to more than half, more than 51% at least. Ryan Cohen, as we know, I made a video recently. Ryan Cohen, as we know, he owns 13% of GameStop. I was wondering whether he will buy more or not, but he cannot buy more for the time being because it would be insider trading. Now he can buy because now we know that he is a director of the company. But it's not just him that joined the board of GameStop. Like I said, 2 former executives of Chewy, the company that was founded by Ryan Cohen, also joined the board of GameStop. There is Alan Attal, who was the former COO and also at some point the Chief Marketing Officer of Chewy. We also have Jim Grove, who was the CFO of Chewy, and at some point he was a Senior Vice President of Finance at Hilton Hotels. What's important here is that these 2 people are loyal to Ryan Cohen. They worked together at Chewy. They worked together and they were able to beat Amazon. Most probably they want to do the same thing with GameStop. Of course, here it's different. There they were on the management. Here they are on the board. But still, they can affect the management. If the management is doing something wrong, they can change it if they want. But nevertheless, Ryan Cohen, he has some limitations. He cannot do everything. Before we talk about these limitations that he has, because he made a deal with GameStop. Instead of doing a hostile takeover, it did not happen. He made a deal with GameStop. Of course, he had to make some he had to give the present board something. Before we talk about all of that, we will talk about what is happening to the board. Because right now, we have 13 members. We used to have 10, now it moved to 13. But in June, when GameStop will have their annual meeting, 4 of the directors will not stand for re-election. And this includes the current chairman. The current chairman, actually chairwoman, Katie Vrabeck, will not stand for re-election. So most probably, I believe that Ryan Cohen may become the next chairman. And it's not just the current chairman who's going. Like we said, there are 4 directors in total. 3 of them are going. And there's also the CEO of Petsmart. Chewy was sold to Petsmart. So Ryan Cohen and Petsmart, they work together in the board. So why is he going? I don't know. But maybe this is part of the deal. Because right now, we don't want GameStop to become the new Chewy also. So if Ryan Cohen has joined the board, maybe this man had to go. There is also the founder of Proforma who is going. I don't know what's Proforma. And there is the founder of another company who is going. I don't know about this company. But what's interesting now is that we have 3 former executives of Chewy on the board of GameStop. We have the former COO of Nintendo America on the board of GameStop. He only joined recently. It was in 2020. We have the former COO of Walmart USA on the board of GameStop. Again, he joined recently. We have, of course, the current CEO of GameStop, George Sherman. We have 2 activist investors, Hashtag Capital, Permit Capital. We remember last June, they had their proxy fight. They won, so they had 2 seats. And lastly, we have the CFO, former CFO of Petsmart on GameStop. Again, someone who worked with Ryan Cohen. So this is quite a friendly board, I will say, to Ryan Cohen. He already has 2 friends and someone else who he most probably knows very well. So 4 seats we have on the side of Ryan Cohen. And I believe that the former COO of Nintendo America knows very well about gaming. The former CEO of Walmart USA knows very well about retailing. So these people are very qualified compared to the board that we have right now. I'm talking about the board in June when these 4 people leave. The current board, we have 13 people today. That's a little too much. But the board that we are going to have in June, that's a very effective board. And what's more important is that they all have skin in the game. The largest shareholder of GameStop today is, of course, Ryan Cohen, 13% of the company. But all these other board members, most of them have skin in the game. The 2 friends of Ryan Cohen, they don't really have skin in the game right now because they are going to stand with Ryan Cohen, so it doesn't really matter. But you look at the CEO, he owns 3% of GameStop. That's skin in the game. And then we have Hashtag Capital, Permit Capital, activist investors. They have skin in the game. And the other insiders, the COO of GameStop himself, the CFO of GameStop, these people also, they have skin in the game. The total insider ownership of GameStop today is 33%. Normally, when we have a company with people and skin in the game in that company, it's a good thing for the company. Because if the company goes bankrupt, they go bankrupt too, most probably. You look at Ryan Cohen, he put a lot of money in GameStop. He only has 3 investments. Apple, doing great, Wells Fargo, not so great, and then we have GameStop here. But nevertheless, like we mentioned, he has some limitations. There is a standstill period which will last till about February 2022. If it doesn't happen in February 2022, don't come and tell me that I was wrong because of the loose definitions on that paper, on that contract that they have. It may not be February, maybe it will be January 2022, maybe March. We will see what happens. But around February 2022, there are some limitations that Ryan Cohen has. For example, he cannot buy more than 20% of GameStop. Actually, he can. Nobody stops him. But if he buys more than 20% of GameStop, he will become an interested stockholder. And I'm not going to go into details today. When he reaches 19%, then maybe we can talk about this, what it really means. Because I did not do the research about that. If it comes, it comes. Then we will see. So what's interesting here is that that limit was 15%. Now they move it to 20%. So they know that he's going to buy more and they want him maybe to buy more. So they allowed him to buy more. Of course, he can buy 25-30% if he wants, but he needs the approval of the board. He also needs the approval of the board if he wants to nominate another director or remove one director. So even though we can say that Ryan Cohen has control of the board today, most probably he will be chairman like we said, but he needs the approval of the board to make big changes to the board. He is also not allowed to bring any new proposal to a vote to shareholders without the approval of the board. I don't think he will have any problem with these limitations. It's going to be only for about a year. After 1 year, he can do whatever he wants with GameStop. And we know that he wants to change GameStop. He's very bullish on the company. That's why he's investing. We don't know where GameStop is going in the future. For the time being, I'm not going to speculate anything on the numbers, how it is going to increase the sales of GameStop. We will see. We need to see when the changes come. But most of the time, when there is activism in the company, it is better for the company. Of course, there are exceptions like with Hertz, but most of the time, activism in a company is a good thing. Now, I know that some of you will have some questions. How does this affect the stock price in the short term? Nobody knows. How will this affect the short squeeze? When will it happen? Nobody knows. But remember that 33% of the shares outstanding are owned by insiders. They cannot loan their shares. Insiders are not allowed to loan their shares. So how come 97% of shares outstanding are short? It means some shares are being counted more than once. And there's a lot of leverage here. So if there is going to be a short squeeze, it's going to be bad for the short sellers. That's all I can say for the time being. You look even on eToro, I was wondering why it's so easy, so cheap to short GameStop on eToro. Because normally if you want to short GameStop today, the interest rate on that loan is quite big. So why is it so cheap to short GameStop on eToro? It's because it's CFDs. So there are CFDs involved. It's not just eToro. There are other brokers using CFDs here because people think that because GameStop has been going down for 5 years, it means the stock price will keep going down. That this is a sure way of making money. It's like an inverse bubble. They want the stock price to keep going down. But I don't think it will end well for these people. As for the valuations of GameStop, of course, when we have activism, this increases the intrinsic value of the company. I have been watching lectures from Ishfaaq Damodaran. He's called the Dean of Valuation. You can watch his lectures. And he talked about that activism will change the valuation of the company. I did not watch that lecture in particular yet, but maybe when I watch it later, then we can revalue GameStop. Today at $20, I still think that it is cheap. When Ryan Cohen was buying, the last analysis I made, I said at $25 it is cheap. It is still cheap at $25. Even maybe $30 it's going to be cheap. Because we need to account for this activism. This activism changes the valuation of the company. The exact value, I cannot tell you today. We will see how things change when we know the real numbers, the real changes happening to the company. If I tell you something today, the valuation of GameStop is $45 a share, it's going to be speculation. So I don't want to speculate. Now you may be wondering whether I'm speculating when I don't know the exact intrinsic value. It's not true. I'm accounting for that because I know that GameStop is not worth $20 today. It's more than that. But I don't know the exact figure. Is it 25? Is it 30? But I know that it should be around 25, 30 for the time being with the amount of data we have. After taking a margin of safety. If you want a comparison of what's happening with GameStop, you can look at the RH. You can look at this stock. There was a short squeeze because of a change in the way the company was operating. And the short squeeze is still happening. So this is a long-term process. In the short term, maybe GameStop will fall back to $15 a share. Who knows? It doesn't matter. Maybe it will go to 25. Who knows? Nobody knows. It doesn't matter. What matters is what will happen in the long term. Because you look at our edge, at some point the stock price even crashed more than 50%, but it recovered. So let me know in the comments, what do you think about Ryan Cohen joining the board of GameStop? I know that many of you will be very happy, except if you are a short seller. Thank you for watching this video. Please like, subscribe and share. Please watch these two videos if you have missed them. Have a nice day and goodbye.